All right, good morning. It is Monday, February 11th, 2019. This is your daily Forex trading strategy session hosted by Forex.Today, brought to you by Traders Way. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money cannot afford to lose. Let's go! Go, go, go! So, guten Morgen, comment allez-vous? Jambo, ni hao ma. All that kind of stuff. Hey, good morning, everybody. My name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Thank you so much for being a client of TradersWay.com. And if you are not yet a client of TradersWay.com, then please visit TradersWay.com and open up at least a demo account on TradersWay.com. Did I say that enough? Traders Way. So what's the instant benefit to you besides just having another webinar? Why should you go to TradersWay.com and open a demo account? Well, as soon as you're in the back office, which will take you less than 30 seconds, you can download MT4. Once you've done that, underneath this video, there's a link that says download my MT4 chart template. So you can download my chart templates, my pivot points, my indicators. I'm going to move that around. That looks terrible. Whatever. My templates, my profiles, my pivot points, my moving averages, my oscillators, my OCO. You can download all that for free and then pop that into your new Traders Way account. That's the instant benefit. And then from that, if you hang out with me for, I don't know, years, maybe you'll get better as a currency trader as well. That is the whole point. I want to make you a successful currency trader. Okay. Hey, I wanted to show you something. You know what this is? The slide deck for one of my classes. Okay. Now you're like, that's a lot of slides, Wayne. Oh yeah, but there's 16 slides on every page. Right? 16 slides on each page. Right? Look at all this beautiful stuff. Nice. Nice. So 16 times 200. That's a lot, right? This is the first half of the class. That's 6 weeks. There's something like 1,500 slides in the 12-week course for one class. Yeah, how funny is that? Hey, Daniel. Hey, Daniel, can you ping me right after the webinar? Are you available? If so, I'd like to talk. All right. Anyways, yeah. So let's go. So this is just kind of where we left off. Swiss franc, Swiss franc, Swiss franc. Let's go over to the pound. They're in some serious trouble. The economic data is pretty pathetic, huh? Absolutely pathetic. And over this course of time, like when you look at it relative to other currencies, like it hasn't done a whole lot against this. It hasn't done a whole lot against that. It hasn't done a whole lot against this. It hasn't done a whole lot against that. But the dollar's really pulled it down. What's happening here? No, Jan, that's for class. I'm doing one on quantitative methods analytics. So far, it's very, 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 very easy. Standard deviation, that kind of stuff. Like, what is standard deviation? You're like, well, is that the square root of the variance? Boom! Got that. That's easy. I'm a currency trader. Can't give me that standard deviation. It sounds like a Bollinger Band to me. Anyways, yeah. So what's going on here? Well, obviously the UK is in serious trouble, and we have this ebb and flow of it's way worse than we think, and then it's right way better than we think, way worse than we think, way better, way worse, way better, way worse, whatever. But why is the dollar doing better, I guess, is another way of asking it. And I think a lot of money is going to U.S. Treasuries. What's the yield on the 10-year T-note? Well, Chuck, I'm not the smartest guy at Harvard, but it looks like I'm going to graduate with honors as being smarter than 90% of people at Harvard. So I'm not the smartest one there, but top 10%, that's all right. That's right. Easier in Forex. Geez, you have to be the top 5% in Forex. So anyways, yeah, so what is the interest rate right now, or the yield on the 10-year T-note? We're down to like 2.6, right? 2.6, 2.65, 2.64. It's crazy. So I remember, I don't know, maybe it was a year ago. I'm sitting by my friend's pool, smoking cigars with them, and I had been waiting for maybe a year for something to happen. And so we're smoking the cigar, and I'm like, oh, something interesting happened yesterday. And I think it's going to be meaningful. I think maybe it's a meaningful sign. Well, what I was talking about was the 10-year T-note finally broke 3.0. And I just thought, we'd be working our way closer to 3.4. Well, we went to like 3.2, which is very, very healthy, very, very reasonable. And this is when the Fed was freaking out, right? Time to jack up interest rates, right? And then what happened? Now we're at 2.6. Holy smokes. We went all the way back. We gave it all back. Wow. And the bond market's the smart money. I stink. So that's amazing. But is it the U.S. economy collapsing? Well, the stock market did drop 10% in like a week. It did drop 10%, but we've had 7 weeks of rallying. We're still adding jobs, and wage inflation's creeping in. So we're doing all right. But the U.S., 70% of the U.S. economy is domestic spending or consumption, right? Domestic consumption, which means it's kind of like a closed economy, where if Vietnam stops buying U.S. goods, nobody cares. But if America stopped buying stuff from Vietnam, Vietnam would care, right? So it's just sort of interesting, like if the U.S. economy is doing all right in the stock market, yeah, let's call it volatility. There's been some downcline, but then there was an up rally, and all of it was actually quite predictable. So then why is the 10-year T-note all the way back to 2.6? What mechanism creates that? Like, if the stock market's been going up, why is the bond market also going up? If the stock market's going up, why is the bond market still going up? Aren't they supposed to be inversely correlated? What's going on? What's the one thing that would create something like that? Well, don't say strong dollar. That's not what made the bond market rally. It might be a consequence, Pete, but that's not the answer. Foreigners, there you go. Foreigners are buying U.S. treasuries. And to do that, they need to buy U.S. dollars first. They have to exchange their local currency for the U.S. dollar. And then once they have their hands on U.S. dollars, they buy U.S. treasuries. It's not political. It's money, Alex. There's no politics in money. Money is just money. So that's what's going on. Money's coming out of London and going to New York. Okay? Money is probably leaving London and going to Europe. I was listening to a discussion about real estate prices in Germany, in particular in the financial centers, like Frankfurt or Berlin. And those rents are going up. Of course, we know rents are going down in London. So, like, money is moving across borders, and that impacts the value of the currencies. Money may be leaving China, for example, and buying U.S. treasuries. Who knows, right? But somebody's buying the bond market in America, and it's not Americans. So do you think an American wakes up in the morning and says, oh man, I got to grab that 2.6 while I can? 2.6% yield? No. But maybe it's the other way around. Let's say, what if it's Europeans buying it? Okay. What if it's Europeans buying? So let's say people are moving out of London and they're buying real estate in Berlin or Frankfurt. But what are the Germans doing? Well, they already love Germany. They're already in Germany. They just happen to be German. So great. What are they doing with their money though? What's the yield? Here, let me write this down just because it's so amazing. Let me get my drawing tool here. Okay. Start, pause. Okay. The yield on the 10-year note. Okay. We'll put 10-year bond. Well, that's 10-year USA. Let's do that. 10-year USA is 2.65%. Okay. The yield on the 10-year, year, Germany, what is that? What's the yield on the 10-year German long bond? Or it's not even a long bond, but note. 0.16. It might actually be lower. It may be 0.09. It's fluctuated a lot. But yeah, okay, so let's just put, we'll get rid of that. 0.1%. So is it possible that money leaves Germany and instead they buy the 10-year T-note? If you had $1 billion and you want to park it somewhere safe, would you loan it to the German government or would you loan it to the American government? Germany will pay you 0.1. The Americans will pay you 2.65. What is it, 1,000% higher return on investment? Crazy, right? Right? Yeah. Thanks, Chuck. Yeah, Chuck's like, yeah, moving to America. So is that why the US dollar is strong? Could be a rabbit, could be. Look at that, 2.65 versus 0.1. Looking good on screen, really? You think? You think? I got my cashmere on. Want to touch my monkey? Really? Thank you, man. Really? I've got a little bit of gray somewhere in here, huh? Somewhere in here. Wait. My hair is actually supposed to be chestnut brown. I used to have chestnut brown hair, and it'd be shiny. Yeah. Go! Yeah, as Michael says, right? Yeah, a little bit. Yeah, just thank you guys. Thank you. All right. So anyways, it's kind of interesting. What is the UK paying right now for a 10-year? What are they, gilts? Can't be that great. I don't even know. All right, so what do you want to do with it, I guess is the next question. Well, if you still want to be a bull, you're in the perfect spot, but you don't have the technicals yet, right? Really. I mean, your strategy might be this way as a bull, but you don't have the entry. Okay? And then for those that swing trade, if you're a bear, let's see this way. I guess you got to go all the way back here. This is where we were on Friday when I did the swing trading group. And at that time, we were sitting on the sell zone. And that's what we call a front run. So if you guys hear me talking about front runs, it means you sell on Friday because you're a bear on Monday. The problem is it's Friday when you do the trade. Okay. I think that kind of stuff's really tricky with the pound because it's so non-fundamental. It's all news. Remember, I tell you that news is not fundamentals. Fundamentals is economic data. Trends in economic data. News is news. News is just news. And this is all just news. Oh, Theresa May said this. Oh, Corbyn said that. Oh, Juncker and what's the other guy? Tusk. Oh, he said this and he said that. And up and down, turn around. You know what I mean? News is noise. Yeah, news is news. That's all. So you have your choice. You know, if you want to try to be a bull, on a weekly you have this. On a monthly you have this. You know, you got to look left and bring it right. Right? Isn't that from cars? If you want to turn left, you have to steer right. You got to find your lines. Like, is this going to be it? And you can see we've already marked them up weeks ago. That this is a zone and that's a zone. This is a zone. Right? My only friend, the trend. Yeah. So if you wanted to be a bull, how would you do it? You find your price. This is my price, and you look for a pattern. Maybe what, a double bottom? I'll never trade pound yen again. So it could get really interesting if it does something like this, yo. Right? Big Fork, Montana. Right on, Jeff. Probably some good fishing out there, huh? So, Jeff, as you might know, I'm from Saskatchewan, just north of you. A lot of people would say, wow, Big Fork, Montana, that's so far north. I'm like, that's where Canadians go to get away from things, right? Yeah. So Saskatchewan's straight up, right? So you get North Dakota, Montana, that border, then you go straight up and you hit Saskatchewan. But you're probably out west, though, huh, Jeff? Western Montana? Yeah, hey, Chuck. Yeah. Chuck's like, yeah, what an amazing coincidence. It's flipping right there, huh? The Palm Springs of Saskatchewan. I'll never look into your room. Where's the hot springs of Saskatchewan? This is like Waskasiu or something, isn't it? I've heard the water is going away. Like the lake is disappearing. It's just like draining back into the ground where it came from. So anyways, pound kiwi, is there anything you want on that? Are you going to trade it kind of like a breakout? How are you going to play it? Maybe you don't really want it. All of that makes sense to me. You know, some says about the ruble dollar. You know, I haven't looked at that in a long time, but I remember when the ruble had its crisis, what was it now, maybe 5 years ago? And it was really something to watch, like very similar to the lira, where it just collapsed, and the collapse got worse and worse, definitely an avalanche. And then the central bank jacked up interest rates, and it came to a halt. But I don't trade it, but I'm not against trading it. Someone actually offered me around that time. Someone called me and they're like, "Do you know anyone that wants to buy rubles?" And I'm like, "Well, you just find a broker and you buy rubles." They're like, "No, cash." I'm like, "What do you mean cash?" They're like, "A dump truck of ruble. How much would you pay for it?" I'm like, "Well, how nice is the truck? Do I get to keep the truck?" But I'm like, no, I don't do stuff like that, but I appreciate it. I don't think it was something ridiculous. They're like, oh, we make a good deal. Number one price. Yeah. But I don't have it. I don't trade it. I don't believe Traders Way has it. But I wouldn't be against it, is what I'm saying. And maybe I'd actually be interested in trading it more. But so I'm looking out here and I'm thinking, so instead of staring out at the lake, maybe I'll just smoke a cigar and think, well, would I want to trade ruble? Yeah, actually, it's kind of cool. But when people ask me stuff like if I'm getting my hair cut, my car wash, or whatever, I'm out talking to the the average folk. They'll always, and they find out I trade currency. They're like, "Oh, do you trade the Iraqi dinar or something like that?" I'm like, "No, I trade the Great British Pound. I trade the euro, stuff like that." Um, but it'd be interesting actually doing a little more like crazy exotic. Like that's not even an emerging market. What would you call that? But anyways, oh, go away. Look at this. I fired this programmer and they just won't leave me alone. All right. Gee. How can we start building a what? I fired you. Go away. How do I turn that off? What are they pinging me on? Upwork or something. Oh, gee whiz. What kind of cigar do I smoke? I don't have much brand loyalty, but I do like quality. So I just ordered 10 Monte Cristos. The thing with the cigar that I like is aged, so that there's been a proper fermentation process. But then once it's made, I like the cigar. All the different leaves just kind of melt into one kind of flavor instead of, imagine there's 5 different tobaccos in here. You don't want 5 different tastes. You want one taste. So one that's been aged properly with high quality tobacco. So that's going to be a more, let's say traditional expensive brand. And then I age them in my humidor for 6 months to a year before I smoke them. But then the other thing I typically like is a thick cigar, thicker than this. This is actually pretty small. I bought them because I end up getting these giant cigars and it takes me 2 or 3 sittings to finish it. But typically a thick cigar because it burns cooler. Imagine if I lit this, the amount of heat and all that, so it gets hot in my mouth. If it's thicker, there's gonna be more, I don't know, whatever. It's cooler. But check that out. So one end I've cut on an angle. You see that? Not just straight. What that does is the shape of the cigar. You see how it's fatter in the middle than it is either end. So when I cut it that way, when I inhale it, it spins the smoke inside my mouth, and I can taste it a little bit better. So that's neat. But that's pretty small for a typical cigar. It's just sitting here, though, on the side of my desk. So, and that sits in my, like I said, typically I'll buy cigars, I'll buy a box, and then I'll put it in the humidor, and it sits there for another 6 months before I even smoke it. Yeah. Then it comes out. I like my cigars also moister, so typically a cigar is at 70% humidity. Mine will come out more like 77% humidity. And then if I have a dark cigar, it comes out like oily and chewy, like wet leather kind of thing. And you can chew on it. And to me, it's like smoking a chocolate cake, a moist chocolate cake. It's like, nice. But anyways. Yeah. Do you use extensions such as 127? Well, I use 121.4 infinite solutions. So let's go back to this. So infinite solution says, do I use 127.2? Okay, I don't know what that is. And the reason for it is I'm self-taught. So if you go back 15 or 20 years ago, there really wasn't information that I found. So I went to a little startup called Amazon.com. And it was a bookstore on the internet. That's all it had were books. And you type in like technical analysis or Forex or Fibonacci. And the only books that would come up, there was only one at the time. Forex Made Easy. That was the only thing when I started. And I actually went to a Forex Made Easy sort of what do they call them? Working groups or whatever. And because I didn't know what they're doing. Basically, they didn't know it, but they paid like $5,000 for a MACD. And they had like the big light strategy and the little light strategy. So like if your 4-hour MACD pointed up and your 1-hour MACD pointed up, you know, that kind of stuff, and your daily MACD pointed up, then you should be long, you know, that kind of stuff. It's really funny, and people paid $5,000 for this, and all it was MACD. There wasn't anything else. It was just an oscillator, and you would line them up on different time frames and stuff. And I said, well, that's stupid. So that lasted all of one meeting, right? But so how did I get to where I get? Like, how are my setups set up the way they are? So I looked at Fibonacci. So I studied Fibonacci on my own. Like, there were no books, is what I'm trying to say. There was no books. There was no nothing. I even went to the Stanford University Library looking for books on foreign exchange, and I got textbooks, but there wasn't anything out there, especially technical analysis. So then I talked to two professional money managers at that time. They were managing somewhere between 300 and 400 million, right? And I said, hey, can I ask you for advice? And they're like, sure, Wade. I'm like, I'm trading Forex. I'm like, oh no, you're trading Forex. You're such a loser. Oh my God. Like, oh, that's not encouraging. I said, well, anyways, so I'm trying to figure out technical analysis. Technical analysis? Oh my God, you're so stupid. What? Hey, Benny, look at this guy. He's trading Forex using technical analysis, and they're like laughing at me. Assholes. So anyways, another true story. So I had to figure this out. Like, no one would tell you. Couldn't buy anything, and you couldn't talk to anybody. So I looked at Fibonacci and I said, well, you have somewhere between 0 and 100. 0 is, let's say, the starting place of the move. 100% is the top. And then it comes back down to some point, right? And we're trying to figure it out. So what are the levels that seem to be important? Well, right, you have 382. This is not quite to scale, but you get me. 50% and 618. Okay. So I looked at that and I'm like, okay, cool. As long as you're in that zone, it's okay. And I noticed if it kicked off 382, it went a little bit higher than if it did the 618. It would go high, but it wouldn't go as high as the 382. And I'd say, okay, well, it's so bullish that a bull is buying it as soon as they can. But down here, it's still bullish, but they're looking for a deal, so they're not as confident. And excuse me. And then I started asking myself, when does a retracement become a reversal? And the other common number that was sort of pre-built into the standard default setting of MACD was this 786. Okay, 786. So I looked at 786 for the longest time. And I noticed like it can come down to 786, but when it did, it very often double topped. But if it went below 786, it was almost always just kept going. So I said to myself, anything lower than 786 is no longer a retracement, right? Not a retracement, but a reversal. So then I said, well, this area here needs to be measured. So I took 100 minus 786. Okay? And the reason I did that is the 382 and the 618 are a reverse of each other, right? What's the opposite of 382? 618. What's the opposite of 618? 382. Right, if you flip them upside down, they would be the same. This is 618, this is 382, but if I drew it the other way, this would be 382, and this would be 618, this would be 382. They're the same thing. They're mirror opposites of the 50%. So I said, well, then there must be a mirror opposite to the 786. So anyway, so I was messing around with that, and I get 21.4. Huh, cool. So then I take this 786 idea, and I said, if it made a higher high, if this makes the highest high, and this makes a moderately high, what if this did make a high as well? It'd be the least high. So I took this 21.4 and I added it to the 100. So I got the 121.4. Okay? So I don't even have it on this. I used to use it a lot. Oh, I just don't even have it. I just didn't describe it. So there it is. So I use the 121.4. That's what that is. So going all the way back to the question, do I use the... See, I don't even know what it is. Somebody asked me about the extension. I don't even see the question anymore. So I don't know what it... Wayne, I don't see it. Where is it? I've lost the question. So do I use the whatever that everyone else uses? No, I don't. So I use the 121.4. And I just wanted you to understand how I came to that. It's this distance here applied to the top. So Chuck Duck says, so like the 127.2, how do you even, like, so I explained how I got to this, right? The distance from this point to this point is exactly equal to this point to this point. That makes sense, right? There's balance and symmetry, right? So how does somebody get the 127.2? So I guess it's just something that I don't understand. So the three major extensions that I use, and by the way, all of this is in great detail in the courses at FX Bootcamp. Okay, this is all detailed and documented. I've been doing this for 15 or 20 years. This has never changed. But anyways, so I use this is the 121. This is the 1382. And this is the 1618. And then there's going to be a 200% up here somewhere. Okay. But again, all self-taught. There's the 200. All self-taught. And then you'll probably notice that I draw my fibs differently than everybody else, right? Has anyone gotten confused by that? Huh? Has anyone gotten confused on how I use my fibs? You may notice that I just draw them once. Chuck says, yeah, it doesn't, yeah. Yeah, Michael's a light, yeah. It's crazy, right? So you have to remember, I am self-taught, so I do things quirky, but I'm also an entrepreneur, so I like to fix things. And from what I can tell, the way that Fibonacci was set up, the indicator, it was not efficient. You had to do everything twice. So to fix that, I just want to study this retracement and get my extension at the same time. So I can say, oh, that's a 382, so we're going to the 1618. You see that, guys? So again, if you've taken any of my courses, you know that that just is just like that. So up there, if it kicks off the 382, we're going to 1618. And then I say it's an M4 and I'm done. I have 100% confidence. Okay, done. But the way I do the fib is different than everybody else. So I looked at it and like, I want to draw this once, and so I want to study the retracement and the extension at the same time. And it wasn't set up that way. So the way I do it is I go to the fib properties, and you may notice this now. To get the 786, which is this number here, this is what I describe as 786. See the description? This says right here, 786. But what is it actually measuring? You see that? It's actually the 0.214. What? You see that? I'm saying, look, I'm telling the indicator now, plot the 0.214, but label it 786. What is 786 plus 21.4? Well, that's 100. So what's happening is I'm drawing my Fibonacci study upside down. And so even though it's measuring the distance from here to here, which is 21.4%, I'm drawing it upside down. So because it's upside down, it's actually 786 from here. Ha 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 ha! Wicked smart, huh? Wicked smart. So 20 years ago, I'm like, this Fibonacci thing's stupid. I'm going to redo it. But that's what an entrepreneur does. They go through life and they fix everything because almost everything in the world is stupid. So entrepreneurs come around and make it better. That's just what we do. We're special that way. So to get the 618, I have to say, all right, calculate the 382, but label it 618. 50% is 50% because 50% upside down is still 50%. And then to get the 382, I have to find the 618 and measure it upside down. Crazy. So I fib study upside down. But the benefit of that is that it automatically does the extensions. So a 382 retracement predicts a 1618 extension. So I can do this all in one shot now. Up, down, pa-chow. Just like that, son. Boom. Chow. Just like that. Crazy, right? I draw my fib study upside down because it works better. Because the first person who ever put this indicator together wasn't that bright. So a typical trader will measure this, and then they'll flip it and they'll do that. Or they'll have one retracement tool and one extension tool. Like, that's just inefficient. Who has time for that? All right? So anyways, yeah, so I've been drawing my fibs upside down on purpose for 20 years. Well, not 20 years. But yeah, I am a rebel. We're the midnight hour, baby. I trade more. Yeah. Love trading in the midnight hour. Okay, pound Swissy just doing its thing. That's cool, right? So some of you might have just been taught how to do that, maybe never understood why or whatever. But every so often people send me an email. They're like, Wayne, I just can't do Fibonacci like you. I just can't figure it out. I'm like, well, I generally don't reply because the answer is clear. They haven't taken the training course, so they don't know how I trade, so they're trying to figure it out on their own. You should just take the training course and advance to year 5 immediately. All right, let's take a look here. How do you want to trade this? If you're a bear, you're going to look for this and that. Okay. This is a sell. This is a sell. Now, if the first one works and it heads down now, so if it kicks off the 21, it's going to do this, and then it's going to, well, let's do it this way. It's going to come all the way back. Okay? However, if it comes back first, then it's going to head down and stay down. Is that right, K-Star? It's got to be somewhere in there. And if not, it's just, I don't know. I've been doing that forever, so. Isn't it amazing that there's something like, there's more than 4,000 videos on YouTube associated with like FX Bootcamp, Trader's Way, or Forex.Today? It's pretty amazing, huh? It's like 4,500 videos. Crazy. That's a lot. All right, so down and back up, or up and down, stay down. Cool, right? Depends on how it goes from here. Okay? Imagine if someone's buying it here, they're thinking this, even though they're sorely mistaken, right? What if, like, I'm not saying you can't be a bull here, but if you think it's going to do that, you're wrong. The way, if it's going to go up, it needs to do this, 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 it needs to do this. There is no such thing as a V-shaped reversal. So even if it's going to go up, it ain't going to go up like that. So you have to break the 21. You have to get to the 55. 55 predicts a double bottom. Then the 21 crosses above the 55. And then this comes back to the 55 and then launches up and rides the 21 from there. Okay. Like that. Mo, mo, mo. Wow. In the midnight hour, baby. Trades mo, mo, mo. That kind of stuff, right? But if it drops down from here, it's an out of position swing trade. And there's going to be a bigger snapback. It's still not going to be V-shaped, but there's going to be a bigger, much bigger retracement. Potentially all the way back to here. Okay? But currently we have an M3 top for the month. So if you're a bear, your target now is MM1. Okay? But it still can have, like, let's say it drops, let's say 100 pips, retrace 100 pips, and then reset here. It just has to do with where people take profit, where people get back in, and all that kind of stuff. If it falls here, it's too aggressive. They're going to make too much money too quickly. They're going to hit this. They're going to take their profit, and then they're going to walk. That's why it comes all the way back. They all take their money and run. Know when to hold them? How do you hold them? Know when to hold them, right? Know when to run. Mohammed says, do you believe in it? Yes, I believe it's, I believe it's true. I mean, I don't understand believe. But maybe it's a language issue. What do you mean believe? Yeah, I believe people use it. I believe it's a theory. Do I use it is a better question. I don't, and I do see how there's a lot of Fibonacci to it. And then there's this idea of kind of what I'm explaining now, like if it goes here too quickly, that there's going to be a correction. And I can see that in how in Elliott wave theory, where you have a big 3 wave, and then it hits a 5 wave, and then it consolidates. And yeah, all of that, it makes sense. Sure, I'm okay with it. The expansion waves, okay, I'm fine with that. A lot of it's based on Fibonacci and price action. I believe in both of those things as well. So to me, it's more of a strategy of how to use different technical analysis together. And if it works for you, like it helps you form and fit these rules, I'm okay with it. Now, typically the people that trade Elliott Wave worship him like a god, which I would disagree with. Oh, he's such a genius and stuff like that. I don't think that's necessarily true. But a lot of what he says is valid. So I would take it like that. Like I just learn price action, just learn Fibonacci, learn various patterns, and you'll see that, yeah, it's fine. What I don't like, for me personally, is counting waves, saying, oh, well, this must be a 3 wave, so therefore the next 3 things are going to be this, this, and this. I don't like being forced into a corner, right? Like baby. Don't force baby into a corner. I don't like that. So I don't buy into that logic. I buy into the logic that the market can do whatever it wants to do at any given time, and things do change. Sometimes they change quickly. Most of the time it's a sea change, which is a slow change. And that these things happen for a reason, and I try to pay more attention to the reasoning. But to count a wave, no, I don't count waves. But I can say, look, if it does this, there's going to be some profit taking. And if it does this, we're just sort of gathering some new momentum. So this one should last longer than this one, because people are going to look at this and say, you know what, good enough, give me my money, because they made their money too quickly. So in my book, I address this. I say amateurs lose sleep at night because they lose money. And they toss and they turn like, oh, I'm losing all this money. This is a problem. Professionals lose sleep at night because they're making money, not losing money. And they roll around, they're like, oh, it's going to come back. Oh, I'm going to leave the money on the table. Oh my gosh, I should take my profit now. It's all going to go away. And they can't sleep at night because they're making so much money. And if you haven't been there yet, it's going to happen one day. And that's why this is a really big, important kind of concept. Professional traders will just say, oh my God, I just made a crap load of money so quickly. It's unbelievable. I'm just going to book this profit while I can. Because if it does this, I'm going to be crying, right? I just got to book the profit, man. I got to book the profit. I got to show my clients. I got to book the client. Oh my God, I got to book it. And they book it. Yeah, but Jeff, that's not interesting, right, though, Jeff? And that's not Elliott Wave either. I think Elliott Wave, when you look at the components of what goes into Elliott Wave, it's reasonable enough that I think you could use it successfully. But of course, anybody can lose money using any technique. But yeah, I think if all you did was Elliott Wave and you were a true hardcore believer and you did worship Elliott Wave as a god, right, as Mr. Elliott, if you worship him like a god and you were hardcore disciplined on Elliott Wave strategies and techniques and you never bent from that, oh yeah, you'd be successful. But then I think you'd be successful using almost any technique because you're so hardcore and focused and disciplined, right? And it's close enough, like if there's enough price action in it, if there's enough Fibonacci in it, like why wouldn't it work? I just don't like the idea. It doesn't feel good to me, but it probably work fine. But like I said, you don't need any of that. But the nice thing is, like, if you go to this, this setup. Okay, I have my pivot points and I have price action. On top of this, you can still use Elliott Wave, right? On top of that, so maybe it's beneficial on a setup like this. That didn't work out. Oh, I know why. Of course, you can monkey with that as well. So, right, this is more like a, oh, now I need blue maybe. So, yeah, so I don't know how an Elliott Wave guy would use that, but anyways. But yeah, there's enough positiveness that you certainly could. But again, Elliott Wave's not going to make you money. Elliott Wave's not going to move you to a better neighborhood. Elliott Wave's not going to buy you a yellow Lamborghini or a Rolex watch or whatever you need to feel successful. Being hardcore disciplined about anything and focusing specifically on that, that's what's going to make you successful. I don't care what it is. Get what indicator? Yeah, so Mohammed, you should listen to everything I tell you. Because I didn't read another book. I never read Elliott Wave. I'm like, Elliott Wave is going to tell me what to do. The Elliott Wave strategy. No. I learned from watching the markets. Shane, just go to fxbootcamp.com. Okay. Oh, these things, zigzag. Insert indicator, custom, zigzag. Okay. Every M24's got it. And then here's the thing that can blow your mind. If you don't like those ones, wait, where is it? There we go. You can change this. Maybe you like that better. All right? 1, 2, 3, 4, 5. 1, 2, 3. 1, 2, 3. Out in the future, something like that. Amelia, the way I answered that is I don't have a copy of my book. It's somewhere around here. I dedicate I think a whole chapter to that question. And it's titled The Greenback Guru. So I said, focusing on one pair isn't a great place to start because you're not really gaining any knowledge. And you may be trading it in a bad period and missing lots of good trades and then later on switch when you should have stayed because you don't know how to do the analysis. So instead, I say pick a currency, any currency. Not a currency pair, a currency, pound, euro, yen, Swissy. And I say, well, a good place to start is the US dollar. And then what I want you to do with it is learn fundamentals. Learn how to do fundamental analysis, reading economic releases, right? So on Wednesday, we have CPI. What does that mean? On Thursday, we have retail sales, right? Today we had British GDP, right? So what does GDP mean? What does CPI mean? How is retail sales important, in particular to this one currency? Okay, so on and so forth. And I say maybe you want to do the greenback or the US dollar first and become a greenback guru, because what's unique about the US dollar is it's a reserve currency for the rest of the world. So every central bank on the planet is holding lots and lots of US dollars, and it matters, right? So as we saw before, the Fed raises interest rates and emerging markets fall off the face of the earth, right? Argentina goes bankrupt again. Turkey goes bankrupt again. South Africa, oy vey, right? Right. So other countries are vastly affected by what's happening in the US dollar. So everybody cares about the US dollar. So why not become an expert in the US dollar first? And therefore, you can, through your fundamental analysis of this reserve currency, you can say things like, oh, because of my analysis of this reserve currency, I think I will, let's say, buy the dollar and sell the Turkish lira, or vice versa. The Fed stopped raising interest rates, right? Buy the Turkish lira, buy the South African rand, right? That kind of stuff. Or if your analysis of the dollar is bullish and then you see a weak pound, you could sell pound dollar, right? So on and so forth. But you want to become an expert in a currency. I don't really care about a particular pair, but if you can do fundamental analysis of a currency and give me a long-term bias for the currency, should I be buying the US dollar or selling the US dollar for the next 6 months? That's a pretty standard question. But once you have that established, now you can go pair it with something in the moment. So if you're like, I like buying US dollars, if that's your point of view, then great. Then you want to look for stuff that's weak. If pound is weak today, sell pound dollar. If euro's weak tomorrow, sell euro dollar. If Swissy is weak later on, buy USD Swiss franc. And all you're doing is buying dollars around the world and around the clock. And then on a day where the dollar might be weak, you just don't trade. You see what I mean? Yeah, well, like I said, I dedicated a whole chapter to it. So that's the easy answer, is basically what I just gave you. Okay. So we were up here, and I said, this doesn't look interesting to me. I think it's just going to stay in here and probably come back down to the lower level. Hey, look, we're back to the lower level. Cool. Is that right, Shizzy? Yeah, just bear in mind it's a 10-year-old book, but there's a lot of truth in there. Even if, let's say, the fundamentals are different today, the logic and intelligence behind it is still the same. They sell it on a little website called Amazon.com. No, but that's a silly one though, Mohammed. Where do you buy a book? You're like, really? But I don't know, at least in America, like, I buy my groceries on Amazon. I buy, everything just is on Amazon. I had a guy working on my my furnace, and he's like, hey, have you considered going on a maintenance plan with us? We give you a really good deal. And he starts telling me the prices and stuff. And I'm like, so what is it that you do when you arrive? And he's like, oh, well, maintenance. I'm like, are you talking about changing the filter twice a year? He's like, yeah, but we look to make sure everything else is working fine. I'm like, what? You're going to charge me with $300 for this? You're going to come to my house twice a year and put in a $2 filter. And he's like, yeah, well, like, look, here's what we do. We have filters ordered on Amazon.com every 6 months. They just show up. It was funny because they just showed up yesterday, in fact. They just show up. So I go down to the furnace and I take the old one out, I put the new one in. So are you going to do anything more than that for $300 a year? He's like, not really. Like, yeah, no, we're fine. We're good. So yeah. Oh, wow. And see, you have to phrase it. Where can I find your book? You should have said, what is the name of your book? There you go. So anyways, yeah, Amazon, dude. And you can type in, how about my name, Wayne McDonald. You can type in strategic and tactical Forex trading. You could probably type in Wayne Forex. You could probably type in FX Bootcamp. Yeah, you'll find it. It's all there. I don't mean to be facetious, but it's all there, man. It's not hard. I bet you anything, you can go to Amazon and spend 5 minutes searching for it, and you're certainly going to find it. I bet you'll spend 40 seconds looking for it, and you'll find it. All right, that's all. All right, so let's do some gold. Cool. Now what? Well, this area here. I've talked about how as long as we're above this area, we're still a bull. Now, we're sort of breaching the moving averages on this time frame. So if it does turn bullish, it's really the analysis is not being made on the 4-hour, but probably the daily. Okay. So most likely this is a daily setup. And yeah, you can see quite clearly that it's just coming down to the daily 21. Okay, so this looks like the most likely play. It's going to look a lot like this kind of did. Okay, and probably even this is pretty much the same. So whoever is in control of this is using a daily chart, not a 4-hour. So that's what I'd look for. I'd look for a bounce here. That would mean dollar weakness, and that would mean positive macroeconomics. So maybe something like, I don't know, like they move Brexit down the line, and that's good for macroeconomics. Or maybe, I don't know, they agreed to the wall on the Mexican border. Yay! And there's some positive economics. Maybe it's, well, again, we have CPI on Wednesday, right? Every Wednesday in the middle of the month. Every Wednesday around the 15th. So you can go to any month on any, right? And January, February, March, April, May, June, July, whatever. And you go to the week where the 15th is, the middle of the month. So just find that middle week. And on the Wednesday, it doesn't matter if Wednesday is on a Friday or a Monday. Is that true, actually? Well, anyways, you go, it doesn't matter where the Wednesday or where the 15th is, but the Wednesday of the week of the 15th, you're going to find CPI. So I know we're in that week. So Wednesday is going to be CPI. I don't know what the date is. It's probably going to be the 13th, not the 15th. But that's how that always works. And then, so maybe that's good for macroeconomics. That might actually be good for the dollar, and that might be anti what I'm trying to do here. So we got to pay attention. So like a good CPI means there is inflation, and that gives the Fed the permission to move interest rates in June, and that would bring dollar strength. So I don't know, we'll have to pay attention to that, right? And so if that means we have to price in another rate hike, that's also going to attract investment, and who knows. Well, Bowman, I don't think is even a voting member, so I wouldn't get, right. I wouldn't get all crazy about that. Yeah, is that right? Tesla Model 3. Ugh. Terrible car. Euro pound? All right. Okay. Okay. What do you think? Currently, we're bearish. So to maintain that, this is the bearish sell zone currently. Okay. So whoever sold up here wants to see it fall here. So up, down, up, down, up, down, up, down, double top, lower low, lower high, and lower low. Yeah, Italy's going into recession. The whole Eurozone probably, maybe even China, but China can do a lot more to get itself out. So also remember, like, I don't hear a lot about this, but like what I hear when I do hear things is that China's economy is slowing down and all this kind of stuff. Oh my God, it's only 6% growth, right? But do you remember when China was criticized for having an unfair market where their state-owned enterprises got too much money and there was corruption and all this kind of stuff going on in China, and people whined and complained about it? Well, I think they're trying to address these things over the last year or two. And the consequence of that is inefficiency. I mean, boy, if you could just bribe someone and get a project done, that's pretty efficient, right? You just pay the money and suddenly you got a permit, right? So now if you actually are regulated or something, things are slower and stuff. And if and you're changing something, and change is risk, and change takes time, and change creates problems on the short run, even if it fixes things on the long run. So I'm not sure if it's warranted because I'm not an expert on China, but if they are addressing some of these long-term systemic problems from their old economy that's still in their new economy, then it might be a variable that's causing the slowdown in China. But they're doing the right difficult things. Remember, they're trying to create a consumer market. Why are they trying to create a consumer market? Because the entire world is slowing down economically, right? Except the United States. Why? Well, the United States, right, 70% of it is domestic. 70% of the U.S. economy is the domestic economy. So you can just shut all the borders, stop trading with everyone. So like, for example, the trade war with China hardly has affected GDP in the United States at all. No, there are some farmers that are hurting, but then someone else is benefiting, and you can just substitute, and you're like, yeah, everything's fine. But the reciprocal of that is the Chinese economy is going into recession. Now, not all because of the trade war, but definitely the trade war is not helping, right? And yet the United States, if you're a small business trying to hire someone, you can't even find someone even moderately qualified, right? And you got orders up the yin yang, like you're doing good, right? So China would like to be there too, to have 1 billion people, and 1 billion people are in the business of serving 1 billion people. That'd be very interesting. So like when you drive through America, I drive through these small towns, I'm like, what do these people do, right? Like, these guys should be Forex traders. You hear this from me a lot. I'm like, they live in this tiny little town, and it's nothing of a rundown little town. I'm like, what do these guys do? They should, they should trade Forex against people in Indonesia and Malaysia, right? Like, you can have access to the global market living in this tiny town. But what is it that they do? And you realize, well, the guy that works in a little coffee shop that's a little dump of coffee shop, well, they make enough money, so therefore they can buy gasoline at the gas station, get their haircut at the haircut place. But what does the haircut place guy do? Well, he makes money so that he can buy gas at the gas station and get a coffee at the coffee shop. And then you're like, oh my God, they're all just living off of each other and yet accomplishing nothing, right? As far as GDP, really, like the haircut guy buys the coffee and the coffee buys the haircut guy and they both drive gas and that guy goes to both places and like they just live off of each other. Well, then you can model that out and say, well, that's what the United States, 70% of the United States does. They don't know what's going on in China or in Japan or in Argentina or the economic situation of Italy right now or what is Merkel going to do after she leaves? Oh, she's going to go to Harvard and meet me. Great. Like they don't follow any of this. They just watch Dancing with the Stars and get their haircut at the haircut place so that the haircut woman has money to go buy coffee from the coffee shop. And you're like, oh, that's cool, actually. But what if 70% of your life depended on Germany? And for a lot of people in this chat room, that might be the case. You're like, dude, 70% of my economy, whatever economy you're in, if it's not the United States, may be heavily reliant on what is going on elsewhere in the world. And Americans are oblivious. Oblivious. And they can be. So China would like to get there, and they're going to have to make some big, serious changes. So another question I used to get a lot, like, Wayne, is China going to become a reserve currency? Is the renminbi or the RMB or the yuan, is that going to become a reserve currency along with the United States? They're like, why not? It's the second richest economy or even the largest economy in the world in many aspects, right? They got 1 billion people, a super huge, large economy, right? Like, why can't it take over as a reserve currency? And I say, oh, well, they don't have a legal system you can trust. That's a problem. Let's see, they don't have a mature bond market. Oh, that's a problem. Money can't freely flow in and flow out of the country. Oh, that's a problem too. Like, yeah, we're a long ways from that. A long ways from that. So anyways, here we go. How would a bull treat this? Okay, we're not quite at the right price. I mean, it can do this. If I was a bull, I'd rather make the 618 anyways. So pay attention. Oh my God, look at the time. I'm sorry. I babbled on too much today. Will you be here tomorrow? Hey, if you're new, please subscribe. And if you haven't done so, would you click the little like button? I'd appreciate that. It matters. Should just take you, what, 1/1000th of a second? That'd be cool if you could just reach out and do that. So make sure you subscribe. Once again, you can download my templates. I'm going to start charging money for the templates. So if you want them for free, click the link below the video. Oh, thank you. Thank you for saying I'm awesome. Chuck Duck's always around, that's for sure. Thank you, Jean-Guy Boucher. Cool, guys. So from the bottom of my heart and from the bottom of the heart of those at Traders Way, we thank you. Please subscribe. And then, of course, please visit tradersway.com and open an account. Meanwhile, enjoy all the videos that I've posted there for you. So have a wonderful day. See you tomorrow. Cheers.